Welcome back. Today, we're conducting an exhaustive 15-minute deep dive into Salesforce's Q4 2025 earnings report. We have 11 key charts to analyze, covering real-time market action to regional segment growth. Before we start, please like this video and subscribe for more institutional-grade research. Now let's look at the market. We start with the real-time market snapshot for Salesforce, where the stock ticker CRM is reflecting current sentiment. Traded on the New York Stock Exchange, the stock recently closed at $195.38, showing a steady upward bias. This represents a modest daily gain of 0.20%, reflecting investor confidence in the company's core platform. Trading volume remains robust as the market digests the latest financial results and future-facing management commentary. As a premier leader in the cloud software space, Salesforce's market performance acts as a barometer for the sector. The resilience of the stock price confirms that investors view the company as a durable, long-term software asset. Deep institutional ownership provides a stable foundation for the stock, especially during periods of broader market volatility. Investors are increasingly viewing Salesforce not just as a growth play, but as a core value compounding holding. Looking ahead, the market remains focused on the company's ability to drive margins through its next generation of AI. Overall, the market snapshot confirms that sentiment remains largely positive as we analyze the underlying financial details. Moving to valuation ratios, the relationship between price to earnings and price to sales provides a window into current market pricing for Salesforce. The trailing price-to-earnings ratio recently stood at 27.19, reflecting a company that has reached a new level of profitability. This multiple suggests that the market is viewing Salesforce as a mature platform capable of sustained, high-quality earnings generation. The price-to-sales ratio of 4.81 confirms this, showing that investors are willing to pay a premium for Salesforce's revenue. This premium is rooted in the company's dominance within the cloud CRM space and its sticky enterprise customer base. Looking at the trend since Q4 2024, we see a gradual compression in multiples as earnings catch up to price. This normalization is a positive signal, indicating that Salesforce is effectively growing into its valuation through disciplined operational execution. Compared to peers in the high-growth software sector, Salesforce trades at an attractive multiple given its massive global scale. Institutional analysts often point to these stable ratios as a primary reason for the stock's inclusion in value growth portfolios. Overall, the valuation ratios describe a company that is reasonably priced for its durable competitive position and growth profile. Financial health is our next priority, examining how Salesforce manages its debt levels relative to its robust cash generation. Total debt at the end of Q4 2025 stood at $17.71 billion, a figure that remains strategically managed. This leverage has been used effectively to finance acquisitions like Slack and improve the company's overall integrated tech stack. Crucially, this debt is well supported by Salesforce's massive cash reserves and its consistent generation of free cash flow. Cash and equivalents reached $5.93 billion, providing a significant war chest for ongoing investment in Agentforce and AI. Free cash flow for the quarter was a robust $5.32 billion, a powerful indicator of the company's liquidity. Looking at the trend from Q4 2024, we see that liquidity levels have remained stable despite major capital returns. The ratio of debt to cash flow suggests a company with extremely high solvency and a low risk of default. This strong balance sheet allows Salesforce to access capital markets at favorable rates, further lowering its total cost of capital. In summary, the debt and liquidity data confirms a fortress-like position that allows Salesforce to execute its aggressive roadmap. The P&L breakdown over recent quarters showcases how operating income and net profitability are scaling alongside Salesforce's massive revenue growth. Total revenue for the last quarter was $11.20 billion, representing a healthy 9.18% increase compared to the previous quarter. Gross profit stood at $8.39 billion, demonstrating the high-margin nature of the company's core subscription-based software services. Operating income for Q4 2025 reached $2.15 billion, proving the efficiency of Salesforce's streamlined global operational model. Pre-tax income was reported at $2.63 billion, reflecting strong core earnings power and disciplined management of non-operating expenses. Net income for the period was a robust $1.94 billion, further solidifying the company's consistent path toward long-term GAAP profitability. Looking at the visual trend over 2024 and 2025, we see a company that is masterfully scaling its earnings alongside its sales. The relationship between revenue and gross profit indicates that Salesforce is effectively managing its cost structures despite global economic pressures. Analysts are particularly focused on the operating income trend, which suggests further room for margin expansion as AI tools drive productivity. In summary, the P&L statement confirms Salesforce's status as a high-margin powerhouse capable of delivering significant returns through market cycles. Turning to the balance sheet, the comparison of total assets versus total liabilities reveals a company that is growing structurally stronger. Total assets for Q4 2025 reached a massive $115.45 billion, representing a record level of global resources and brand equity. This represents a significant 21.34% increase in assets compared to Q3 2025, indicating aggressive strategic investments and expansion initiatives. On the other side, total liabilities increased to $56.31 billion, largely to support the company's rapid multi-segment growth phase. Total equity stood at $59.14 billion, providing a substantial cushion and reflecting the long-term value created for Salesforce's shareholders. Looking at the trend since 2022, the balance sheet exhibits a high degree of stability and a clearly improving net equity position. The year-over-year growth in total equity of 3.52% confirms that the company is successfully compounding its internal value over time. The quality of these assets, including significant intellectual property, ensures that Salesforce remains a resilient leader in the logistics of data. The healthy ratio of assets to liabilities suggests that Salesforce is effectively leveraging its balance sheet to fund the next decade of innovation. In summary, Uber's financial position is at its most robust level yet, providing the bedrock for sustained market dominance and operational agility. The operating, investing, and financing cash flows chart illustrates how capital moves through Salesforce's vast and growing global ecosystem. In Q4 2025, cash from operating activities reached $5.46 billion, a record result that highlights the company's robust profitability. For the full fiscal year 2025, operating cash flow was reported at an impressive $15 billion, reflecting exceptional growth. Cash linked to investing activities was negative $8.71 billion, as Salesforce continues to strategically reinvest in its technology platform. Financing activities saw an inflow of $1.59 billion this quarter, reflecting tactical adjustments to the company's capital structure. Free cash flow for the quarter stood at $5.32 billion, while the full-year total reached a massive $14.40 billion. This high level of free cash flow confirms Salesforce's efficient cash conversion cycle and its ability to fund internal innovation. Comparing the quarters of 2024 and 2025, we see a consistent and accelerating trend in operating cash flow generation. This self-sustaining financial model is a major competitive advantage, allowing Salesforce to lead without needing significant external capital. In summary, the cash flow data confirms that Salesforce is a cash-generating giant with immense financial flexibility for the future. Diving deeper into efficiency, the price-to-sales and EV to EBITDA ratios allow us to benchmark Salesforce's scale against industry peers. The price-to-sales ratio currently stands at 4.41, representing a healthy valuation for a leader in the tech services sector. The enterprise value to EBITDA ratio of 15.02 further highlights Salesforce's strong operational profitability relative to its total market value. The price-to-earnings ratio recently stood at 27.19, confirming that the stock is priced reasonably for its current earnings power. The price-to-cash flow ratio of 13.31 indicates that the market is valuing Salesforce's actual cash generation power very efficiently. As of 2025, the company employed approximately 83.33 thousand people globally to manage its vast technology and marketing infrastructure. These ratios, when compared across the quarters of 2024 and 2025, show a clear trend of consistent and high efficiency. The stability of these metrics justifies the market's willingness to reward Salesforce with a premium valuation in the software space. For many institutional investors, these balanced ratios indicate a company that offers both defensive stability and significant growth potential. In summary, the key financial ratios confirm that Salesforce is operating at a best-in-class level of scale and operational efficiency. For income seekers, Salesforce's relatively new dividend profile marks a major shift in the company's long-term capital allocation strategy. The next quarterly dividend is expected to be $0.44 per share, continuing the payout streak initiated recently by management. Investors should note the next payment date on April 23, 2026, with the ex-dividend date set for April 9th. On an annualized basis, the dividends per share stand at $1.66, providing a trailing 12-month yield of 0.85%. The payout ratio for fiscal year 2025 was a very conservative 21.33%, down from 25.15% the year before. This low payout ratio indicates immense capacity for future dividend growth as Salesforce continues to scale its free cash flow. The introduction of a dividend is a powerful signal of Salesforce's financial maturity and its commitment to returning excess capital. Management is masterfully balancing aggressive investment in AI with a reliable income stream for its diverse global shareholder base. Looking at the blue trend line, we see the dramatic jump in 2024 as the company pivoted to this model. Overall, the dividend profile confirms that Salesforce is now a core holding for both growth and income-oriented portfolios worldwide. Earnings per share performance confirms the company's ability to beat consensus even during periods of intense innovation and global investment. In the most recent quarter, Salesforce reported a massive $3.81 per share, significantly beating the $3.05 estimate. This represents a staggering 24.94% positive earnings surprise, one of the strongest results in the company's recent reporting history. This outperformance is consistent across the year, with Q2 and Q3 also showing double-digit beats of 8.7 and 13.5%. Looking ahead to Q1 2026, analysts have set a consensus estimate of $3.13, reflecting continued confidence in margin health. Expectations continue to climb into late 2026, with estimates reaching up to $3.54 per share as AI synergies mature. The consistent gap between reported and estimated EPS highlights the powerful operating leverage inherent in Salesforce's multi-cloud software model. These beats serve as a primary catalyst for the stock's valuation, providing a technical floor based on fundamental earnings growth. Management's track record of conservative guidance and consistent delivery is a major factor in the high conviction from Wall Street. Overall, the EPS snapshot reinforces Salesforce's position as a dominant, profit-generating giant that consistently exceeds the market's high expectations. The quarterly revenue chart showcases a consistent trend of meeting and exceeding Wall Street's top-line expectations over the past 2 years. In Q4 2025, reported revenue reached $11.20 billion, successfully beating the analyst estimate of $11.19 billion. This represents a healthy year-over-year expansion from the $9.13 billion reported in Q1 2024, demonstrating consistent growth momentum. Looking back at 2024, the company maintained a strong streak of positive surprises, including a notable beat of 1.76% in Q3. In Q1 2025, the company delivered another positive surprise of 0.75%, confirming its ability to navigate a shifting macro environment. The forecast for 2026 remains highly optimistic, with quarterly targets set to climb from $11.06 billion to over $12.23 billion. This high degree of predictability in revenue growth is a primary reason for Salesforce's inclusion in large-cap growth portfolios globally. The synergy between different cloud offerings continues to drive multi-product adoption, providing excellent top-line visibility for the next fiscal year. Management's ability to provide accurate guidance while consistently delivering incremental beats is a hallmark of their relationship with the investor community. Overall, the revenue surprise data reinforces Salesforce's status as a reliable top-line performer with a clear and durable path for expansion. Finally, we analyze the performance of Agentforce service and software license segments, which are the primary pillars of Salesforce's ecosystem. Last year, the company generated a record $41.52 billion in total revenue across its diversified global operations and sources. The top-performing segment remains Agentforce service, which contributed a massive $9.82 billion, representing significant year-over-year scaling and adoption. Agentforce software licenses also showed impressive results, bringing in $9.03 billion as enterprises accelerate their digital transformation initiatives worldwide. The Agentforce 360 platform, including Slack and other integrations, contributed $8.88 billion, highlighting the strength of the company's collaborative tools. Integration and analytics segments added $6.23 billion, proving the increasing value of data-driven insights for Salesforce's large enterprise customer base. Regional performance was anchored by the United States, which accounted for $25.29 billion of total revenue in the last fiscal year. This domestic strength is complemented by a growing international footprint, where Salesforce is capturing significant market share in EMEA and APAC. The synergy between these various cloud and AI segments creates a powerful flywheel effect, driving higher user engagement and platform stickiness. Overall, the segment data reinforces Salesforce's position as an indispensable platform for global commerce, customer relationship management, and advanced AI automation. In summary, Salesforce's Q4 2025 results reinforce its status as a premier global leader in the cloud and AI software space. The data shows exceptional consistency, growth, and structural profitability that positions the company for decades of continued market leadership and success. Thank you for joining this exhaustive deep dive analysis. Please share your thoughts below, like the video, and subscribe for more. See you next time.